Market watchers expect Singapore's inflation to stay low in 2025, as global energy prices have remained below last year's levels. Services inflation, which has been on an easing trend, is expected to slow further as productivity improves. Nadira Zaidi with this report.
Singapore's core inflation fell to 2.1% on year in October from 2.8% in September, the lowest since December 2021 and under Economist expectations.
This is led by lower energy-related prices, such as electricity, and of course, we're also seeing that services-related inflation really led by lower travel-related cost has also declined. That's one point. But the second point really is also given, a relatively high base year over the same period last year.
Headline inflation also eased to 1.4% from 2% in September, mainly due to slower price increases in housing rents and private transport costs.
Government has also increased the number of COE supply in the market throughout the last few months, and also I think in fact into early next year as well. So I think this has all helped to put a lid on the increasing COE prices, and this has led to a decrease in private transport inflation.
Analysts say inflation is likely to stay subdued in 2025. That's especially as the incoming US administration has signalled tariff hikes.
This also means that demand for global goods and services, for that matter, from the US may take a step down, and that could actually mean slower inflation prints as well for Singapore as a whole.
This could mean better real wages next year, with salary hikes met with an increase in productivity.
So if I'm paying an employee too much without a corresponding increase in productivity, I'll have an increase in unit labour costs. But at the same time, if I'm paying an employee a lot, but yet he or she is producing a corresponding amount, then my unit labour costs will also come down correspondingly.
For the full year, core inflation is projected to average 2.5 to 3% before further easing to between 1.5 and 2.5% in 2025.
And for more analysis, I'm now joined by Alvin Liew, who is senior economist at UOB. Now, Alvin, how long will it take before we see the trickle down of easing inflation to actually address the cost of living concerns?
Hi, evening everyone. So basically, inflation means the change in prices of goods and services, while cost of living is really about how much you need to spend as an individual, right, to maintain a certain lifestyle. While they are related, but again, we see when you talk about inflation, right, it's the change in the prices itself. And in terms of cost of living, right, while there is an impact, the inflation at the current situation is slowing. You can see the numbers coming off in the latest prints itself, but it's still a positive number to put it that way. So things are still getting expensive, just at a slower pace. And so in terms of maintaining that cost of living itself, right, you will still need to see wage growth, and that's where the part comes in on how wage growth will help to mitigate the increases in cost and maintain your lifestyle in terms of cost of living itself. Yeah.
And speaking of which, do you foresee that wage growth in the coming year will beat inflation?
Well, I think there are two parts to it. First, of course, I think we are coming off from we have seen a relatively tight labour market here. Of course, then that would have translated into high wage growth. But the tightness in the market have seen some moderation, and with that, we think that wage growth itself would also be coming off. There are the other mitigating factor, of course, is that the inflation prints like this one that we saw today is at a 3-year low. Though if you translate that to real wages itself, divide by prices itself, right, that means that real wages is actually relatively strong. It could be relatively stronger, and that could help mitigate that impact itself if we continue to see inflation easing into lower prints itself.
Now, Alvin, taking all this into consideration, what do you think the monetary policy response will likely be in January?
So basically, this number we saw today, the October number, right, does reinforce our view that we would see some easing coming in from MAS either in January or in the April MAS policy meetings. The reason for that is definitely that the number is easing, and I think if we move into January itself, where the GST, if in fact actually gets washes out, right, the inflation numbers, headline numbers itself would actually improve further itself. But of course, that is lowering a slight easing of the tight monetary stance that they have. That means that we are looking at the currency appreciation stance, right, at a lower rate, but it is still an appreciation stance.
Now, Alvin, also a quick look ahead before we go. What are your expectations for next year's budget, also taking into consideration geopolitical events that are happening around us now?
I think geopolitical events, if you look at what has happened across the last few years, right, has been one of the key drivers of commodity prices and overall driving inflation, of course, on the backdrop of supply chain disruptions as well. But going forward, we are looking at the coming in of a new US president. And if Donald Trump does keep to that one of his promises that to end all wars, right, that actually on that side of the commodities outlook itself may see commodity prices coming off, and that could be further helpful to the inflation outlook. In terms of next year's, I think you are referring to next year's budget, right? I think on top of mind, right, I think cost of living remains an issue that a lot of Singaporeans face. Then we would also expect to see measures continues to be put in, right, to help a lot of this group of Singaporeans, right, to continue to deal with cost of living pressures. And on top of that, of course, we know that next year's budget will be coming in at the election year in 2025, and a likelihood is to be expecting more generous, I would say, more generous measures given to help with a lot of these cost of living measures in 2025 itself.
Alvin, thank you so much for sharing your insights with us. That was Alvin Liew, who is Senior Economist at UOB.